Next question. Explain securitization in India. It is the Citibank who pioneered the concept of the securitization in India by bundling auto loans into securitized instruments. So that was the first, like the securitization transaction that took place in India. Thereafter, many organizations securitized their receivable. Although started with the securitization of the auto loan, it moved to other types of receivables such as the sales tax deferral, aircraft receivable, etc. The government of India has come up with the securitization and reconstruction of the financial assets in enforcement security interests, Surfacity Act 2002 to tackle the menace of non-performing asset. Means to make sure that we get the recovery of the dead assets fast. Something like this, an act has been introduced. It has become an important source of the funding for microfinance companies and non-banking finance companies, and even nowadays commercial mortgage-backed securities are also emerging. The important highlight of the scenario of the securitization in Indian market is that it is dominated by a few players. It is ICICI Bank, HDFC Bank, and National Housing Bank, etc. As per the report of the CRISIL, securitization transaction in India scored to the highest level of approximately rupees 70,000 crore in the financial year 2016. Business Line 15th of June 2016 report. In order to further enhance the investors base in securitized debt, SEBI allowed foreign portfolio investment (FPIs) to invest in the securitized debt of unlisted companies up to a certain limit. They have provided further the Citibank case. In the Citibank assigned an auto loan portfolio to People's Financial Services Limited. An SPV floated for the purpose of securitization to, that is said, to ensure true sale. PFSL was owned and managed by the group of distinguished legal counsels. It issued PTC. It was rated by CRISIL. So credit rating agency, and the kind of instrument we know that it is PTS, pay through security, and PTC, say pass through certificate. It was listed on wholesale debt market on the National Stock Exchange. So that say anybody can do the trading, say in the security. It was listed, say, in the market. So in secondary market it was listed on National Stock Exchange. We know that, say, any of the security which is issued by any of the company, it may be equity share, it may be preference share, it may be debentures, all of them are listed on some stock exchange. So over here it has been given that it was listed on the National Stock Exchange on the wholesale debt market. Why? Because the underlying is similar, not exactly the same as the debentures. HG Asia, Birla Merlin were market makers. Market makers means, say, they were, say, doing all the procedures. They were making, that is, they were making an effort so that the transaction will take place for the security for buy and sale. Global Trust Bank acted as the investor's representative. Citibank was also servicer. Servicer means that, say, who will make sure that, say, entire collection procedure is done properly. PTCs were easily transferable. Each transfer had a stamp cost of 0.10%. Interest rates were high through, though, good quality of the underlying asset in the portfolio. So they want to mention that the special purpose vehicle was transferred good asset quality, means whatever the loans receivable of the Citibank, those good loan receivable had been transferred to this special purpose vehicle. In spite of that, the interest rates were high. Why? Because it was new kind of instrument. That was the reason. Because initially investors will be reluctant to make investment in these kind of new instruments. Interest rates were high due to unfamiliarity with the certificates. Mostly investors were mutual funds. Foreign investors were hesitant to invest because of the unsecured nature of the instrument, because ultimately we understand that the risk is transferred to the investor, and absence of any clarity on whether the certificates could be treated on par with other debt securities in the investment policy. So basically how it will be recognized, and how, if at all the things are not favorable, the payment will be made to the investor, was not initially so much clear. So foreign investors were hesitant in making investment. And we always know that for any new kind of instrument, unless the laws are properly established, it is difficult to make any investment by anyone. Even though certificates were listed on NSE, there was little secondary market activity, means the buy and sell activity, due to absence of adequate amount of the alternative security of the similar risk profile. This is the source from which it has been taken. Apart from this, there are further certain transactions that have taken place in India for the securitization, that is provided to us over here. Starting from 1991 to 2007. This is the source. So they have provided that for the personal loan, a special purpose vehicle was formed by the Citibank for this amount. Mortgage-backed securities by National Housing Bank and HDFC for this amount. Aircraft receivable by Jet Airways. Sales tax receivable by Government of Maharashtra. So whatever initially that we understand, the concept of the securitization, that it is basically for the financial intermediary. Now we understand that it is of course not the case. We have to understand this in a broader way. Even Government of the Maharashtra is doing this. Jet Airways is doing this. ICICI Bank, collateralized debt instrument. Citigroup, floating rate securitization, fixed rate auto loan receivable of the Citibank and Citicorp Finance Limited included it. Then Indian Railways, lease rentals payable by the Ministry of the Railways to IRFCT. So whatever the lease rental income that it is going to receive, for that they do securitization. ICICI Bank, for that it is the auto loan receivable.